I think one of the things you mentioned too, and I think this was a perfect transition into kind of sharing with you guys, the ones I'm going to share right now literally came from you guys, from the last call. Some of you guys wanted us to kind of dive in on some of the markets. And so I'm going to share specifically this one property, but kind of what John mentioned is, if you notice, he's saying, hey, buy time, negotiate your deal, take your time to do your due diligence so that you're investing. And so what that means as well in many cases is you really want to start understanding what's going on in that market. Part of what we do when we do our analysis is we pay a lot of money for other tools, kind of like this is one of them, where it allows us to really begin to explore what's going on in these markets, develop certain heat maps to start identifying on price per square foot, what's happened historically. And so this actually happened to be a property in a zip code 34689 in Tarpon Springs, which is kind of my market where we do a lot of business. And you guys will want to know a little bit more about what we do. So it's like a multi-family 7-unit. So one of the things, and again, I'm not going to go into too much detail on how we comp things out. I think most of you guys have seen demos, so it's kind of demo on a software. What I really want to just do is kind of scroll down and say this, our idea here is to get a total transaction history. What's happened historically on these deals that I'm looking at? To really start gauging, has this been on the market? Was it listed? When was it sold? To gauge the level of motivation of what's going on. Then we start developing kind of a heat map when we're analyzing deals. For the sake of this example, just what this allows me to do is to really go in here when I'm looking at a property comparable, zoom into it. And again, this is what my underwriting team and my loan officers use for all of our clients, because our goal is to offer value, right? And so if I want to know what's going on in this area for a period of time, I can easily say, what is the average growth that is taking place? And what you'll see is in some of these streets, literally these are differences in growth. So literally sometimes, especially in small commercial, you will find that it's just a matter of 2 blocks that make all the difference in values in the marketplace for what's happened historically to grow. If we look at, for example, price per square foot, you'll notice that even just by changing that in the heat map, you'll also see that in this parameter, the price per square foot is a lot more than for, say, the other one across the street. And so it's interesting to really start gauging information on heat map. It doesn't mean you don't do the deal, but it just makes you really get more inquisitive about what's going on in this particular market. And so we really take a look at that. And again, if I want to look at the most recent 1-year growth, for whatever reason, and this little block has grown more than this one based on the data that we have. If we look at 5, it still shows consistently, but this market up here was actually hotter, if you will. There was obviously more transactions here that were higher. So again, this is just some of the preliminary stuff that we do when we're doing our due diligence. From there, one of the things that I like to do is start really looking at, or have my team look at, the multiple exit strategy. So what are the rental incomes in the area? We start comping out, doing the same exact thing. Why? Because I want to know, what does cash flow look like? What does the exit look like on this deal as far as what's being sold? We are able to then kind of go from this portion here and begin to get forecasts based on algorithms that they pull in data, so that we can say, look, this was historical data. This is where we were approximately 2016. And look at the difference from 2016 in growth on average price in that particular zip code to where we are now. And based on the market data and the research we have, we can even start seeing projections that this market is going to decline in values over the next couple of years. Now, it doesn't mean this is going to happen, no, but based on the trajectory of key algorithms that we're pulling based on the zip code data, it really is, it does make a difference, right? You can also take a bigger picture from the block and you'll kind of see the difference in the block, right? So I love the fact that we're able to start analyzing this information. Now, nearby properties, again, I just want to look at based on the property condition, and I'll show you one in PDF in a minute. Does my property that I'm analyzing right now, does it compare with what the market demands in that area? Does it conform to that market? And so, for example, if I was looking at deals around this square footage in this area, probably wouldn't be as excited. I'm going to be looking at mainly properties that conform to the community, and these are the buckets. And so again, this is critical stuff if you're looking at investing, to begin the preliminary research. Then lastly, one of the things we do here is, and I found this to be pretty accurate, this data begins to give us preliminary information regarding whether this market is truly a neutral market, an actual growth market, or at a very high risk for loss. And so as you can see, take a look at this, just in the last 34 months. This month last year, the risk for this market in this zip code going down was 11.3%. This month, we're at 36%. You guys follow? So you can already see that there's a trend of potential neutral activity. And we can also gauge it based on this. Based on the data that we see, look at 2005, that was more of a neutral market. It became a seller's market. Here we are at a seller's market, but there may be a slight slowdown. So again, this data really gives us perspective. Look at this month last year, the average days on the market were 58. This month, we're seeing it at 72. So we're already starting to see that this market, we have to anticipate a longer days on the market in order to be able to produce. When I scroll down here, I then start looking at days on market from history so I can gain perspective and I can say, look, 2015, the average days on market was 95 days. We're looking at 2017, we were at 54 days. Here's the low end right here by 2008 when there was hardly any inventory, as you can see on this side, 53 days and 48 days. And so here we are now at 54, but it's starting to come up based on the data. So again, this information of days on the market versus month of supply really help us to identify what's going on with supply and demand. And again, as an investor, when we're looking at deals, this is a very localized market. So we leverage technology like this to let us know and give us indicators on what those trends look like. So when we lend money, trust me, I tell investors this, whether you like it or not, if I'm giving you money, you're my partner. And so it's important for me to make sure we fully understand what's going on in those markets in order to be able to show that.